Hi, it's Jonathan Watts here from Simply Finance, back today to talk about the CCCFA and the changes that are coming through regarding that. In our last video, we had to talk through a whole bunch of different things about mortgage finance, but today we want to specifically target the CCCFA and all the news media that's been going on around that. So you might ask, what is the CCCFA? Well, it's the Credit Contracts and Consumer Finance Act. It's a mouthful, so it's easier just to say CCCFA. It's a bunch of regulations the government brought in with the best of intentions last year to try and stop money shops lending to poorer families, payday-type loans at exorbitant interest rates, and just literally keeping them in debt perpetually, week in, week out, year in, year out. So the government had the best of intentions to try and stop that happening. But what they did was they brought in regulations that went right across all lending. So car loans, personal loans, mortgages, and the banks and the lenders had to implement those changes, whereas they had to start looking at more detail as to what you can afford as a borrower, what your outgoings are, can you afford this loan today, but can you also afford it in the future, and what other potential expenses you might have coming down the pipe. Australia had the same thing, but the Australian government got smart enough and made the changes, and they backed out the changes around the mortgage finance side and allowed that to flow a bit more easily. The frustrating thing about, I guess, the media is at the moment is that it's reporting that these changes have occurred, that the government's agreed that it's all going to happen. And there was even the minister on the news the other night talking about the fact that they've realised they need to make some changes. That's fantastic, but it hasn't happened yet. And it's going to take some more time before it flows through. So probably around June, July, late June, July, those changes may come through. They're looking at some other changes too. They're waiting to get some more feedback from MB about what other changes they need to make to the regulations. But again, nothing is in concrete yet, and yet the media is reporting it as if it's actually happened. So the banks have made no changes yet. They've made no adjustment to how they're assessing loans. The CCCFA requires them to analyse your bank statement in detail, literally line by line. And some of them have implemented software that does that. It actually takes your bank statement and it categorises all your spending so they know exactly where it's all going. Whereas before, they just used to go through and pick out the highlights, the main stuff. Now they're looking at your spend on lotto or your takeaways or your savings and all those sorts of things. So the changes to the CCCFA that are coming should allow those things to be probably a little bit more glossed over or taken into account, that these are not necessarily regular expenses that are going to keep going, and people will adjust their spending when they have a tighter mortgage to pay. So waiting for that to happen. The challenge is by the time we get to June, July, the bank assessment rates will likely be higher. So in other words, when they check whether you can afford this mortgage, they're checking whether you can afford to do it at mid-6, high 6s. It'll be in the 7s by then, more than likely, 7% range. So that's not the interest rate you'll pay. It's what they assess you at. Can you afford to pay this mortgage at that level? So that rate will probably be higher as they possibly back out some of these CCCFA changes. So I guess the key takeaway today is that these changes have not happened. You apply for bank finance today, you're going to still be assessed as if the CCCFA regulations are in place, and they're going to analyse your bank statement, which I guess speaks to the point that worth talking to a mortgage advisor, because we know how to express these things, explain these things, and mitigate these things, and also help you to possibly adjust your lifestyle and your habits and give you some advice around that as to what you need to do to tidy up your statements to be bank ready. Because again, the phrase I think we used last time, you need to be bank ready. And that's about managing your money. Because they're going to lend you their money, they want to make sure that you can manage the money that you've got coming in. So look forward to chatting to you next time. Jonathan from Simply Finance.